going on, everybody? Welcome back to day 10 of Road to getting my first ever payout. And on this journey, I am trying to go from an unfunded trader all the way to getting my first payout with a prop firm. Right now, I'm currently funded with Apex Trading, and I am currently trying to get my first payout with them. In today's stream recap, I'm essentially going to go over what I learned from last week and what I plan on changing moving forward. Also, some of the key principles that has been really helpful in my journey as well too. Without that being said, let's go ahead and get started.
Good morning. Welcome back. Today is day 10 of our Road to Getting the Payout series. Let's go ahead and get started in the charts. Let's go ahead and take a look at, but first things first, some really important news. Biden dropped out of the race, which is crazy and is probably the reason why we're going to expect bullish prices on NQ and ES at the same time, and just bullish prices for the dollar in general. This is huge news. I'm really going to see how it's going to affect the market today, and we're going to take a look at it as well too. So before we get started, I woke up this morning, got to the charts a little bit earlier at 9 because I've noticed since last week I was getting to the charts around 9:30, and it's really been hindering my performance because I've been missing certain things that I may be looking for in my trading setup. So this week I made a vow to come to the markets a lot earlier. So I was at the markets today at 8 o'clock looking at my recap from last week, looking at some of the trades I've taken over, and also as well as just kind of looking to kind of improve a little bit as a trader. There's obviously some things I've noticed, and moving forward, our plan this week is going to be a little different. Still looking to catch some retracement setups, of course, obviously, but majority of my setups is going to be dependent on the 15 key levels. The 15-minute key levels being that key levels that are obviously in confluence with the trend, but most of my setups are going to be based off of market structure and key levels. Last week, I want to say I was too heavily dependent on Fibonacci's, and I don't want to use that. So I have my confluences in order. I'm going to pull it up in a second, but in the meantime, let's look what we see on each one of these pairs. I'm still biased on gold, man. I still think that it's going to buy at this level. Price is showing me otherwise right now. Price is kind of, it looks like it want to hold on, but it's still playing around at this level. At best, it may not be a bullish day, but it may be an indecision day, which means this candle at the daily at 4 p.m. may close as a doji. So we never know what's really going to happen here. We never know when we're going to get this initial move to the upside, but I really think this initial move is going to happen. Now, coming back to my time, gold, not really seeing much. I see it in the current. Like I said, I still have a bias to the upside in bulls. So I'm going to be looking maybe potentially to take buys above here if we do get above there. Now, key thing here, ES and NQ, both looking for buys. We're both above VWAP right now, but I'm looking for a strong key level on the 15. This is going to be most of the reasons of my factors for this trade this week. I'm looking for a strong key level on the 15 to take. And right now, looking at the 15, none of these are really to my liking, to be honest with you. I don't view this level as strong. I don't view this level as strong. They would be weak key levels to me. I view a level like this strong, multiple touches, and thus forms a huge impulsive move. So NQ, we're breaking above here. The hourly is going to close in about 2 minutes, and we also have the candle retracing here a little bit. But this hourly candle is going to close in 2 minutes, looking and hoping for it to close above a little bit. And with the 15, whereas entry, if we don't get a close above here, I'll probably be waiting a little bit to be, but I want to take some type of trades off of this level above right here. With that being said, today, honestly, I wouldn't be shocked if it's a no trade day, and I'll be fine with it as well. So while we wait for the market to do its thing, all right, let's go over what I have written out for last week. So there was a few key main things that I'm written out in my trading plan. So the first things I want to say is I need confluences I need in order, right? Will be, just exit this one like this. So the confluences I need in order will be very, very simple. Right. So the first thing I need is I need the VWAP in my favor. I've noticed from just past trades, whenever VWAP's in favor, it really is not only just an indicator, but it's usually meaning that most of the times when I compare it with price action, or when I combine it with price action, better said, it really leads to really good trending trades and trending opportunities. So the VWAP is the number one indicator that I'm basing my trade criteria off of, because it's just giving me that solidification and that validation that yes, we are trending. And of course, I'm looking for new highs and new lows to be made as well too, in confluence with the VWAP. And then that leads us to our second confluence, which is key level on the 15, no other time frame. I've noticed from just going back to some of the trades that I've been looking at in my journal from when I was first testing out this strategy, majority of my wins have been because there was a strong key level on the 15 time frame. No matter if there was fib or wick fill, no matter what the reasoning was, if there was a key level, most of the times all my wins had a key level in it. And then I noticed something in common too with some of my losses as well. Most of my losses have been because there wasn't a key level or a really strong clear key level on the 15, or I took the trade at somewhere that was pretty far from where the ideal 15-minute key level is. So this is the next thing right here, and I spelled optional wrong, don't roast me. Anyway, so this is the next thing right here. I'm looking for a key level on the 15. It must be very important. It's going to be the second factor that I base my trade decision off of. If I don't get it, no trade. Now, as you can see, it says optional, right? But what I meant to say is optional, right? Fibs. So fibs is going to be an option. A fib in play on the 15 is optional. Of course, I want to take the trade that has more confluences, that has more decision factors. But if it doesn't have a fib decision factor, as long as we get these two, it's still a valid trade idea. Now, of course, I'm going to want to see some more things like either a wick fill or a VWAP retest, but that's just kind of where I'm going. I'm no longer having a fib as a need condition in order to take a trade, or a really, I want to say a priority confluence in order to take the trade. Next, of course, is wick fill. Wick fills are really nice, and I really like wick fills, and that's all I got to say about it. And then last but not least is VWAP retest. I don't really view the VWAP lines on my chart as huge support and resistance levels or key levels where price get bounced off of, so that's why I have it last. And if I don't have a trade that doesn't have a VWAP retest, I'll still take it with full confidence, because I'm just not really too sold on the point of having moving averages as key levels. I like looking at structure, and I think that's the mistake I was making last week. I was having the fib play like key levels, when, being honest with you, it's almost the exact same as VWAPs. They're essentially just areas, potential areas where price could retracement could end and the next impulsive leg could start. But at the same time, it's I want to say an imaginary zone compared to an actual price action where you could see what the candles or how the candles have reacted to a certain zone in the market. So that's what my confluences are going to be for this week. Some things I don't have written on here is risk per trade. So right now I am about 1,300 in drawdown left. What I'm looking to risk is still I'm risking 200. I really don't like my Apex account, man. I really am really frustrated with the problems Apex been going through, and also as well as the equity drawdown instead of end of day drawdown. So I'm looking to get started with Top Step pretty soon. So I'm just gonna keep a standard 200 risk. I'm still looking to get that payout, but if I don't get it, all well, on to the next trade, right? So things to keep in mind. I've noticed most recently I've been getting caught up in ranges that's been disguising as trending markets. For example, perfect example, if we go back to last week or this right here, right? Majority of the times I probably would have taken a buy right here. But looking at the overall, you're still not necessarily making new highs. Can we count from here to here as a new high? Who knows? I don't think it's strong enough though, right? And the same with NQ. Not really making new highs. We're getting wake tests and we're testing new areas, but and this is a play that I want to add later on in my trading career, where I'm basically playing the false breakouts, because that would be essentially the counter to my current strategy right now. But I think a key trade that really illustrates my point when I'm saying I've been trading ranges disguising itself
as trending markets was this one right here. So on the 15, I'm just going to get rid of all of the indicators and the drawings and stuff like this. So if we really look at it from here, right, we have a clear level here that's been projected and respected a lot, and also has been, you could so-called say, the start of this move above here. But let's break it down into current time frame and the current session. When we're looking at this right here, I can say new high, new low, new high, new low, but really we're just kind of box. I could draw a box from here to here to here. It's not a clear defined trending, something like this, right? This is something clear. This is something defined, something I can see that, okay, we're clearly ranging down. For example, this would have been a beautiful trade opportunity, right? Nice little fib play here, key level here, boom, right? VWAP, below VWAP, VWAP retest, boom. Beautiful trade, right? Compared to trades like this, right? Where essentially I'm playing in so-called trending markets, but really they're still in a range. So that's something that I have to definitely keep in mind this week, is I just have to watch out for those markets that are disguising, those trending market or ranging markets that are disguising themselves as trending markets. The next thing as well too is closing conditions. So I have two main closing conditions that I've been looking at, and it's been so helpful to have some type of journal that has all of your previous trades when you was back testing your edge or something like that, and you've taken these screenshots and you're able to go back. It is so helpful. So I've noticed, right, two main closing conditions, right? If 15 key level gets broken with high volume, right? For example, I draw a little illustration right here. If this happens, pretty much just get out the trade, right? If it doesn't respect the key level off of the initial retest of it, then just get out. That's it. I have a little thing here. Is that like, this is where you should close. If you would like to be a little bit more conservative, just wait for the initial rejection. So what this means is, instead of just entering right here, I always do a bit aggressive. I can be conservative and just wait to see if this candle indeed rejects this level. And you can avoid unnecessary losses like that as well too. I just kind of gauging where I want to be. If I want to be aggressive on the trade, if I want to be conservative on the trade, it's all based off of, I want to say, volume. If I see a lot of volume in the markets, I want to be a little bit more aggressive when it comes to these key levels. If I see a lot least volume, or not least volume, low volume, I might want to be a little bit more conservative. Who knows, right? Now, next one is market structure breaks against your favor, or initial structure created from initial rejection gets invalidated. So what does this look like? I'm going to show you really quickly. I don't think I could pull up this example, but I can go to my Edgewonk and show you guys a clear example of what it looks like. Let's go ahead and do that really quickly. All right, so this is my little portfolio of backtested trades. So now, what does this look like? Well, here, let's look at this most recent loss. This is a really good example of it. When I pull up this screenshot here, first things first, on the 15, you see this is the nice key level, right? But this could also be identified as also trading ranging markets disguising itself as trending markets, right? Necessarily here, we reject off of a pretty key level right here. And what do? We go back to the top. Now, I really wish I could have seen what happened afterwards, but we go right back to the top of the range. Instead of making new lows below this low, we reject this low. But here's my thing. I'm already having a fib marked out based off of this low. I'm seeing this candle, which I've been seeing a lot, and I notice why now. All right, little tea break. Use the noise in the background. Anyway, regardless, as you see here, this level kind of bounced off, and I've been noticing this candle a lot recently. I've seen this exact candle so many times in the last few days. And it's this candle where it comes down really, really bearish and it looks amazing. But then the candle closes like this, right? It closes with like a wick and a body. And if you put it side to side, the wick is essentially almost the same height as the body. And that's something I've been noticing so much. And I got to start paying attention to where it's happening more, because I believe it's starting to happen in conditions where the market's still ranging, but it's ranging between new lows and new highs. Right? So for example, you see here, it rejects off this low and it ranges, but there's been so many instances where whatever the word, you get the word. Anyway, there's been so many moments where I've drawn a fib off of this candle, right? This candle being the start of the retracement, and the whole time it's just a continuation of a range.
So that's something I'm going to look at and look more in depth with as well too. But this is a perfect example, like I said earlier, of initial rejection of a key level, but it comes back up and breaks through, right? Being that as it may, we get the retest of this key level right here, right? And let's say retest of key level, it comes down and rejects, stops need to go here immediately, right? Once it puts in a high, right, after rejecting a key level, right, once it rejects a key level that is putting in essentially a high, I want that to continue being a high. I will place my stops right above here every single time, and if it goes above, closing conditions, we're out. And what I'm going to start doing is I'm going to stop manually closing my trades when we get to these levels, and I'm going to start just dragging my stop loss there, because I could just save a couple of bucks on losing trades and stuff like that. But yeah, that's pretty much it, man. That's all of the recaps that I did from last week, and also just kind of viewing over some of my back tested trades. I don't think we're going to get too much in the market, so I'm going to be on the charts until maybe 10:30 because I want to enjoy my day off from work. So I'm going to be on the markets until maybe 10:30, see what kind of happens. If I don't see nothing by 10:30, I'm going to get off and I'm going to enjoy my day off. That's something I've been noticing as well too. I love trading, but sometimes, when there's nothing there, you just gotta call it a day. So I know I yapped a lot, but I hope this was kind of beneficial for someone who is still learning how to and still developing as a trader, but they kind of know how they can develop a little bit more. Just take time to view your performance from last week, view how the markets was last week, and also while you're trading, make sure you're writing down what are the reasons you're taking your decisions for. Something I've been dealing with pretty badly this week was just doubt. And of course, it makes sense. And I remember that I had a friend I talked to about it, and he just said, of course you're going to feel doubt, right? You're not receiving gratification for your current actions, which really, I don't know. I never heard that before, but it made sense. You've been performing really well and you're not seeing gratification for it. And that happens a lot in trading sometimes. So this has come of that point where you got to be focused more on delayed gratifications, continue focusing on the process, committing to what you can control, and just sticking to your plan. Because in moments like this is where I want to switch up my strategy or switch up my plan. I can't do that. I need to stick to what I've been trading. This works. It's an edge. It's been proven to give me an edge. I need to stick with it. It's just that simple. And I've only, out of just trading this new edge that I've been trading for the last 2 weeks, I've only taken 5 trades. That's not enough data in live markets to say, oh, something needs to change, right? Just because I'm going on a 4 trade losing streak, I still have 15 trades that I have to take in order to figure out, like, what's up with this strategy? Did it perform like it said it would? Or is it lagging a little bit? So I am 15 trades left until I can evaluate the performance of this strategy, and it's just that simple. I didn't want to spend any extra money on another challenge. I might as well just use the one that I have, because I don't even like Apex. So if I lose it, oh well. And the good thing is, and this is why it's so key to have a job while you trade, because you have income coming in, right? You're not placing your all on these challenges. I've been able to store a lot of my income, so I'm not worried about blowing a challenge or blowing a funded account, because I have the income to support getting another one. And as long as I'm building the skills, bro, these accounts are going to come and go. They're going to come and go. And one of the key things, like, I've noticed, bro, Matt, Trades by Matt, if you're big in the futures industry, he literally took an account from, had a 50K account, and he withdrew it. I believe it was 200,000, or maybe I'm wrong. Maybe it was, no, I think it was more like 500,000 in 85 days. And he blew the account, which was crazy, but it still goes to show even pros have their days. And it was very inspirational. I'm very thankful that he uploaded that, because it was a reset check for me. It's like, cool, you know what works. You know what I'm saying? If it works, just hop on the wagon and try it again. And I love his approach of just getting in the live markets. He traded 3 days on tilt and lost maybe, I don't know, 200,000 in withdrawable funds, and he got back on the horse the next day, which was insane to me, because I always been told take a few days off. But I understand, you take a few days off, you may be, when you come back, you're going to be afraid, you're going to be all types of things. You might as well just get back on the horse, especially if you've been performing well. So I know I talked a lot. I'm gonna shut up now. I'm gonna listen to my music and I'm just gonna watch the charts, and we're gonna take it from there. All right, so 7 minutes until 10:30. Maybe we get something at 10:45. Who really knows? This is so interesting to me. I really want to see how this gold plays out, but I can't see it now, so I just have to wait and see what happens. Projection off this level. I mean, the CE here projected this, but like I said, no real 15-minute key level. So give it about 6 more minutes, see what kind of happens, and then afterwards we just pretty much gonna get off the charts for today. All right, I'm gonna get off for today. I'm not really seeing much, so we're just gonna go ahead, get off, call it a day. This is a slow Monday. I kind of expected it to be like that. I want to do other things, so we're just gonna let the day go by. I'll probably keep an eye on the markets every now and then, but the stream, I'm gonna go ahead and end it here. Peace and love.